Markets enter Tuesday with a cautious but constructive tone as investors balance persistent geopolitical uncertainty against resilient global risk appetite. The Reserve Bank of Australia headlines the session after holding interest rates steady while delivering a notable hawkish message, reinforcing that inflation remains a concern and that further tightening remains on the table if required. This has helped underpin the Australian dollar and serves as another reminder that central banks are not yet ready to declare victory over inflation. In FX, most of the focus remains on relative central bank expectations. We already mentioned the Australian dollar, but the yen is also trading under pressure, but cautiously as markets assess the durability of last week's intervention. The US dollar is largely range bound overall as investors avoid taking aggressive positions ahead of tomorrow's US CPI report, which is widely expected to be the week's macro event. US equity futures are modestly firmer, with investors encouraged by continued AI related optimism and resilient corporate earnings, though conviction remains limited ahead of the inflation data. Looking ahead, the market's attention today now shifts towards positioning into tomorrow's US inflation report. A softer than expected inflation print would reinforce expectations that the Fed can remain patient and could support further gains in risk assets, while an upside surprise would likely reignite concerns about higher for longer interest rates and inject fresh volatility across currencies, bonds, and equities. The market will also, of course, be monitoring developments out of the Middle East and overall the tone of geopolitical tension. That's all for now.